President Muhammadu Buhari, Moroccan king, discussed strategic development. Federal government offers savings bond for subscription at 1,000 naira. IMF projects improved capital spending for Nigeria in 2021. Plus, oil prices rise as producers commit to output restraint. This is Business Express on the network service of NTA, and we are reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. President Muhammadu Buhari and the Moroccan leader, King Mohammed VI, have discussed joint efforts towards the realization of strategic development initiatives, including Nigeria-Morocco gas pipeline project and a fertilizer production plant. The heads of state in a telephone conversation welcomed the positive and dynamic bilateral relations between the two nations in all critical economic sectors since the king's visit to Nigeria in 2016. And President Buhari's return visit to Morocco in 2018. President Buhari and King Mohammed expressed determination to carry out as soon as possible the Nigeria-Morocco gas pipeline project and construction of a fertilizer production plant in Nigeria. President Buhari, who spoke with the Moroccan king from his country home in Daura, thanked him for his country's support in the fight against terrorism and violent extremism, as well as education through scholarships and training. The federal government has given more insights into the cut in automobiles import tariffs, just as it dismissed claims by a section of the organized private sector that its decision amounted to a policy somersault. Minister of Industry, Trade and Investment, Niyi Adebayo, said Section 38 of the Finance Act 2020, which proposed reduction in tariffs on importation of vehicles, is not a policy somersault, but essentially an absolutely critical review of an existing policy that required adjustment. The minister explained that the reductions in the tariffs would only affect the automotive sector in the short run, adding that it will eventually unleash development in the sector. The minister's clarification is in response to the controversy trailing the implementation of the Finance Act. How much is the Naira exchanging for other currencies? Let's take a look. Foreign portfolio investment in Nigeria dropped to a four-year low at 729.20 billion naira in 2020 as foreign investors' appetite for Nigerian investments remains subdued by macroeconomic risks. Nigeria's latest report obtained shows that foreign transactions in Nigerian markets declined by 22.64% to close 2020 at 729.20 billion naira as against against 942.55 billion naira recorded in 2019. The decline FPIS in 2020 counteracted the general increase in momentum of activities at the Nigerian stock market, which saw a 12.45% increase in total turnover value. The report also showed a wider gap between foreign portfolio inflows and outflows, implying that foreign investors divested more than 2 kobo for every kobo invested in 2020, the worst deficit in recent years. The International Monetary Fund, IMF, says Nigeria's capital spending would improve this year, even financing the country's deficit will remain a challenge with a debt servicing burden. This is even as the Nigerian equities market ended the first month of the year 2021 on a strong positive note, with investors going up by 1.130 trillion naira. IMF, in its January 2021 fiscal monitor released recently, projected overall fiscal balance of 5.9 and 4.7 for the year 2020 and 2021. This is an improvement compared to 0.8 and 0.2 it had projected in its October 2020 report. Having classified Nigeria as a low-income developing country, the IMF said capital spending in 2021 is expected to recover partially in most countries such as Guinea, Haiti, Malawi, Nigeria, and Tajikistan after the temporary cuts in 2020. The average overall fiscal balance is estimated to be lower in 2020 by 1.7 percentage points of GDP, while the average public debt increased by 5.2 percentage points to 48.5% of GDP at end 2020. Well, the Nigerian Stock Exchange has continued to receive positive reviews when it closed the month of January 2021 on a positive note to emerge the best performing stock exchange in Africa. Professor of Capital Market Uche Uwalike says the feat is a reflection of investors' confidence in the exchange.
This performance has been the favorable policies, especially the monetary policies of the central bank, which have engendered a low interest rate environment, and this has triggered investors' interest, in the stock market. And as long as it remains, I have no doubt at all that the equities market, will continue to do well and outperform its peers.
Trading activities on the floor of the Nigerian stock market finished the month of January impressive to emerge the best performing exchange in Africa. This is according to available data and activities on the Nigerian Stock Exchange, which opened the trading year at 21.06 trillion naira in market capitalization and 40,270.72 in index at the beginning of trading on January 4th, 2021, closing the month at 22.19 trillion naira and 42,412 index points. To shed more light on what made this possible is an economist and capital market analyst, Rotimi Fakayejo, who joins us via telephone from Lagos. Mr. Rotimi, you are welcome to Business Express.
Good morning. My pleasure.
Okay, Mr. Rotimi, if you can hear me.
Yeah, I can hear you.
Okay. NSE emerges Africa's best performing in January after closing the month of January 2021 on the green territory. What factors are responsible for this?
For the Nigerian capital market, if you take a close look back to what happened in 2020, Nigeria emerged as one of the best three markets in the world. That is appreciating for the year by 50%. It's a landmark after several years. And for the first month in the year 2021, we're again closing the month with a positive change of 5.32%. That is also another landmark. And what might be responsible for this? Yes, there is a lot of positive outlook for the economy in the year 2021, the market having weathered through the ups and downs of pandemic, lockdown, and all that was in the year 2020. So what we are seeing presently is a lot of anticipation, which is positive with respect to the audited financial statements of companies listed on the exchange, which will be released very soon, or some of them are already being released, and they are coming out in positive figures. So investors believe that with the low return on fixed income securities, which is about 1%, or maybe when there are some special bonds by private organizations, corporates, we are having maybe not more than 7% or thereabout, like the Bois Cement commercial paper that was and the bond that was launched. Now, what I'm saying is the equity market holds better returns for investors, and we have seen much better stability in the last 12 months. So investors are hopeful that the volatility that we used to see in time past has already, at least we are seeing a better light, and at the same time we are seeing a situation whereby the returns on investment is paramount, and that can be gotten from the Nigerian Stock Exchange.
Okay, low yield environment in the money market instrument drove equities market performance. In January, do you see this trend continuing towards the end of first quarter? More so that the first day of trading of the month of February, that was yesterday, closed on the negative note.
Well, I'm very positive that we are yet to see better days for the year in the first quarter for this year in the Nigerian equity market, because the expectations are actually high, and no disappointment is actually coming in at all. Results, the earnings results for companies are what is actually driving the market at this time. Investors have come to settle with the fact that there is low return on fixed income securities. So that is already a settled matter. Now, how much can they get from the Nigerian equity market? That question remains very big and very promising. And as such, we are expecting that for some companies, the dividend yield, if you buy any security now, the dividend yield between now and the time when the result will be declared or when the dividend will be paid, maybe towards the end of the first quarter, we are talking about as much as 7% in some companies, and even as much as about 10-12% in some others. For instance, a company like Zenith Bank, which paid a net dividend of 3 naira last year, we are seeing a situation whereby they might repeat the same this year. So if they are paying as much as 2 naira 50 kobo at a time for the final dividend, then definitely the yield on such is about 10%. So investors are in for a very good deal in the Nigerian equity market. So for those who have not really positioned themselves, I believe now it is the time so that at least they can take advantage of what it's there for them to take, and also hold on to their investment for the coming financial year.
Okay, looking at the central bank's decision, talking about the Monetary Policy Committee meeting that retained all parameters previously, how does that impact on the capital market? Talking about the positives we should further expect from the capital market in 2021.
Yes, if we look at it closely, the week prior to that MPC meeting, we saw some downward trend in the market because investors were very apprehensive of the kind of decisions the CBN, the Central Bank of Nigeria, might take. And some were thinking that the parameters will be tampered with, maybe increase in some cases or lowered in some other cases. But as it turned out to be, all parameters were retained, which further consolidates the position that investors already have in the Nigerian equity market. So we are expecting that come March, when the CBN MPC meeting will be taking place again, is most unlikely that they're going to tamper with the parameters, and as such, we're going to see more stability. So one thing we need to bear in mind is that a low MPC rate or a stable MPC position is actually a plus for the Nigerian equity market.
Okay, looking forward to that time and to such possible reviews. Nigerian stocks are currently undervalued, and present an opportunity for growth in the short to medium term. What is your thought on this?
Yes, because my thought on this is that if we look at the prices of securities about 6-7 years back, and you look at the prices of these same securities about now, the prices are almost the same. And when you look at the exchange rate of the naira, some 6-7 years back, or let's not go too far, about 3 years back, we are talking 3 or 4 years back, we are talking about 167 naira or 199 naira to a dollar. Now that we are having it at over 400, I think there needs to be a repricing in the Nigerian equity market. And to shed more light on that, if we look at investors that are foreign portfolio investors that may want to come to the country, if they come, we have a situation whereby the quantum of naira they will be getting when they exchange their dollar for naira is much more. That means they are having a better advantage over local investors by having come to invest in Nigerian market. So I believe the Nigerian equity market stocks are very low priced. So those equities need to be repriced. And the only thing that can bring about that is a situation whereby we have more participation in the market. So when more people buy stocks, then definitely we're going to see a higher pricing for those securities. So but nothing can happen yet until we see better participation, which is exactly what represented what we saw in the year 2020. So we are hopeful that things will definitely turn better, and we're going to have a better and more rewarding market.
Okay, with the prospects you've pointed out in terms of the exchange, how would you assess the financial services, mostly the banks, then you talk of ICT and the industrial sectors, present strong prospects for growth, given their resilience to the economic recession? Would that continue? What's our expectation in that direction?
Well, the Nigerian economy is a very resilient economy. For a lot of people or a lot of analysts outside the shores of this country, they would have expected that by now the Nigerian economy will have crashed. But that continues to be the reverse. The Nigerian economy is working stronger, at least remaining stable to a great extent. And for me, I believe we still have a lot of opportunities in the various sectors. The banking sector, we are not seeing a dwindling profitability in those banks. The ICT is actually growing. We are seeing better profitability. The industrial sector, giving more power, stable power supply, we're going to see a much better performance. So the horizon is very, very positive for the Nigerian economy. And as such, those various sectors will definitely do exceedingly well, I believe, in the year 2021.
Well, we have been talking with Mr. Rotimi Faka-Yejo, capital market analyst. Thank you so very much for sharing your thoughts with us at such a time as this.
My pleasure. You're welcome.
Thank you. Well, moving on, economic strategists say the key to every business thriving in this second wave of the variant coronavirus is innovation, as business owners need to find creative ways to offer value to their consumers. That is the strategy a young businesswoman who is a professional in the health sector is taking. Bose Able will carry us from here.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
Chioma Nyoma Igwe Kano is a medical doctor who is saving lives in this era of the coronavirus pandemic. Not only is she in the medical line, Chioma also has flair for fashion.
I'm in a family where we like fashion and we just want to put our work out there. It's just something I really like, something I have interest in. So I feel like if you have interest in things, just go for it. I have interest in saving lives and I have interest in wearing clothes and pushing my fashion sense out there to people.
As a medical doctor and fashion designer, she tells how she's been able to juggle both and striking a balance.
It's just something I really like, something I have interest in. So I feel like if you have interest in things, just go for it. I have interest in saving lives, and I have interest in wearing clothes and pushing my fashion sense out there to people. My challenge is actually creating content. I plan myself, I plan my day, I have time I study, I have time I research, I have time, it's researching here, researching and study, I have time I do that, and I have time where I create my content because I have to post my bags online, I have to post clothes online, so it's just proper planning.
Just like every young entrepreneur, Chioma has been able to put into practice lessons learned from the first wave of the pandemic.
I used to put my things online. I have my Instagram page, I post on WhatsApp, I have my Facebook page, so I was able to get people to see my things. So that was even like where I made my good sales, and then here too, I make sales here too. Oh yes, I've heard about CBN intervention funds. I've heard about CBN intervention funds for entrepreneurs. I haven't applied yet. I'm still managing my capital I have. I'm still able to manage what I have now. So I don't know, maybe in the future, let's see how everything will grow.
It has been a challenge keeping businesses afloat in this era, but Chioma says she has been able to manage the situation to keep the business going. Boss the Able, Business Express.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
Moving on, oil prices rose around 1% on Tuesday after major producers showed they were cutting crude output in line with their commitments on restraint, supporting a market thrown out of kilter by weak demand during the coronavirus pandemic. Brent crude was up 51 cents at $56.86 a barrel, while U.S. oil gained 53 cents to $54.08 a barrel. Both contracts rose more than 2% in the previous session. And moving on, silver prices fell more than 2% on Tuesday as investors booked profits following a rally of as much as 11.2% to a near 8-year peak in the previous session. Stocks in Asia Pacific traded higher on Tuesday morning following an overnight jump on Wall Street. Muplang Dakok takes it from here.
Stocks in Asia rose in Tuesday trade following an overnight jump on Wall Street. Mainline Chinese markets nudged higher with the Shanghai Composite up 0.55%. In Japan, the Nikkei 225 gained 0.81%, while the Topix index advanced 0.8%. European stocks also opened higher Tuesday as global markets reflect positive investor sentiment that an economic recovery following the pandemic is not too far away. London's FTSE opened 46 points higher. Germany's DAX pointed higher, and the CAC 40 of France also up 29 points. U.S. stock futures rose early Tuesday morning after the equity market kicked off the week with a bounce-back session. The Dow Jones Industrial Average climbed 163 points. Those for the S&P 500 and the Nasdaq 100 also traded in positive territory. Markets in Africa also point to a positive start as global markets reflect positive investor sentiment of an economic recovery. With global markets update, Muplang Dakok.
This is where we end this episode of the program. Don't forget you can access this and all previous episodes on YouTube. You can also communicate with us on Twitter, and the handle is @NTA News Now. The hashtag is BizX. We value your feedback. Do join us again tomorrow at 3 p.m. Stay safe.